There are 4 ways that charity tax filings are unreliable for purposes of understanding how efficiently a charity is operating and thereby how efficiently it is likely to use your donation. My name is Lori Styron. I am the Executive Director of Charity Watch, the only independent charity watchdog organization in the United States. First off, charity tax filings are inaccurate a lot of the time. In the almost 20 years I've been doing watchdog work, I've witnessed hundreds and hundreds and hundreds of mistakes made in charity tax filings. What you need to keep in mind is that charity tax forms are often filled out by people at the charity themselves, unlike audited financial statements, which are prepared by outside CPAs. Charity tax filings may omit unflattering information that you would find in the audit because that's produced by a third party. In the tax filing, you know, if someone at the charity doesn't feel like disclosing certain things, often they can just omit unflattering information and no one will be any the wiser. The second way is consistency. Sometimes a charity will report a certain financial activity one way one year and a different way the next year. Even though the exact same activity has occurred, they'll just, choose a different reporting method, or they might report certain expenses on one line in one year and on a completely different line in a different year, and also allocate them differently. So even if a charity spent the exact same amount of its expenses on programs and fundraising and management from one year to the next for a particular activity, they could just kind of decide, well, that information doesn't look so flattering. Maybe we'll report it differently in another year so that we can look good in these online rating databases, or so we can just look better to any person or donor in particular who's looking at a tax filing. So because charity tax filings lack consistency, any rating that relies only on pulling numbers from a tax form without analyzing them and making adjustments is going to similarly be inconsistent from one year to the next. The third way is comparability. It's kind of similar to the consistency, but it's slightly different in the sense that when you're comparing one charity against another. So two charities might be conducting very similar or almost exactly the same types of activities. One will choose one accounting method or reporting method to report those activities. Another charity might use a different method. And so even within the same accounting method, there are just a lot of different lines where different expenses can be reported. Some charities are much more generous with their claims of how much they're spending on their programs. And so the tax filings, because they lack comparability, you could have one charity that's being more honest about how it's spending its money look worse to you than a charity that's being less honest simply because of the way it filled out its tax filing. So there's a comparability issue among different organizations. And the last one, and I don't know if I want to rank these in order of importance because these are all pretty important, but completeness. There are some nonprofit organizations that have multiple legal entities where they have money flowing through. So you make one donation to one legal entity and then that organization eventually makes large grants to a related legal entity and then maybe even another one. And so when you have all of a nonprofit's resources flowing through different legal entities, if you look at any one tax filing by itself, it's only going to reflect the activities of one legal entity, meaning there's a huge amount of information missing that's highly, highly relevant to understanding how efficiently a nonprofit is operating on the whole. So this is just a short lesson in why and how charity tax filings are often highly unreliable unless you have a lot of financial expertise and you understand what adjustments need to be made, what errors to look for, looking for consistency from one financial year, reporting year to the next, and also making sure that all charities are being treated fairly by making sure that adjustments are made so that the information is comparable. Please come to our website at charitywatch.org for more accounting tricks that charities use to try to look good to you. My name is Lori Styron. I am the Executive Director of Charity Watch. Thanks, everyone.